Good morning, everyone. This is Michael Douville coming to you live from Phoenix, Arizona, and what a beautiful place to live. This is April 28th. It's 10 o'clock in the morning. Tatum and I are doing a live seminar, and we're doing this on oil. We've had a lot of questions. Of course, oil has been in the news all this week because of all the turmoil that's been going on in the oil markets. And I thought we'd do a little bit of a webinar on how this is going to affect us. And let's just do a little bit of history. You know, I'm a baby boomer, so I go back quite a ways. And when I was a kid growing up in the 60s, gasoline for my car was about 30 cents a gallon. And we would squawk if it was up around 32 cents a gallon, and every once in a while it'd be 28 cents a gallon. And we went into the gas stations. Not only did they fill the gas, I didn't have to get out of the car. They did it for me. They'd wash your windshield, check your oil, check the pressure in your tires. And if you filled up your car, they give you one of those wonderful collectible Libby glassware. And I was so proud of those. I literally had boxes full of this Libby glasses, but I was so proud to get those. And times, of course, changed. We had the oil embargo. And then, we had this theory called peak oil. And peak oil came along and said, this is a scarce commodity, it's a precious commodity, and prices started to rise. And of course, it became very, very expensive. And we got up around $100, $150. And quite honestly, right around 2008, when we in Phoenix are just having this terrible time with our real estate cycle, of course, is ending in 2006, 7, 8, 9, and 10. We understand that this is a pretty terrible time. Not so much in the oil patch. 2008, oil was $150 a barrel, and I'm going to tell you, it was a boom. Anyone that was producing oil was making a literal fortune. So oil was costing about $50, and there was a scarcity. The only problem with the scarcity is they kept finding oil. Russia found oil everywhere. Azerbaijan and all the Turkestans, they found oil all across Russia. And then on the North Slope in Alaska, they found billions and billions of oil reserves. And yet it was a scarce commodity and the prices kept going up. Well, you know what happens with prices going up? You get good jobs, you get growth. Everybody wants to invest in an oil company. Everybody wants to lend them money, and huge profits were to be made. But we all know what happens when there's lots of profits to be made. People start to get competition. And of course, we started producing more and more oil because this scarce commodity, we started finding we got oil absolutely everywhere. There's oil all across Texas, Oklahoma, North Dakota, all through the Bakken Reserve, Pennsylvania, up through Canada. We found oil everywhere, oil. And so this peak oil theory started to fall apart because obviously there was oil everywhere. However, we were using this oil and oil kept growing, but we kept producing it. It was $50 a barrel is what it cost to produce oil in the United States, is about their break even, $50 a barrel. And for years and years and years, it was running between $70 and $110 a barrel. But as you can see on this chart, right here, we ran into a recession right around 2024, 2015. The business cycle started to slow down. We got a pretty strong correction, and the price of oil plummeted. Right down here, it got down to $26.21 in 2016. Well, keep in mind it's $50 to break even. These companies were losing money. What do you do when you've got too many workers and not enough dollars to pay them? You start firing the workers. So in 2016, over 200,000 oil workers were fired. Now, at that time, we were producing about 8.5 million barrels per day here in the United States. And you can see by the graph, we started, again, the price of oil came up. However, now we're the largest oil producer in the world. We're producing almost 12.5 million barrels of oil a day. And of course, now, as you know what's going on in the marketplaces, we're actually losing money. So what do you do when the price of oil starts to come down? And say you're an oil company and you have a $50 million a month that you have to make. Well, when oil's at $50 a barrel and you get uh, you can make 1,000,000 barrels. Well, then it's $50 million times $50 times 1,000,000 barrels. You get $50 million. But what happens if that oil drops down to $25? You still have a $50 million nut that has to be paid. So you have to produce 2 million barrels of oil to just to break even. And of course, that happens with everybody. As the price of oil goes down, you start pumping more because you need that income to come in to pay your bills. Because the oil patch, that's where all the bond money was spent. That's where all the stock was. Everybody was throwing money at these guys. And of course, they're high yield bonds because they were fairly risky. They were out there wildcatting and doing things that aren't necessarily a sure thing. So they paid a higher interest, and everybody loved to get some yield in a very, very low interest yield. But of course, the price of oil kept dropping, and we kept producing more and more, which brings us back to Saudi Arabia. Saudi Arabia says we're going to go ahead and break the shale producers in the United States and pump more oil. But let's think this through. In Saudi Arabia, the only revenue they get is from oil. They need about $75 a barrel in order to pay all the kingdom's expenses. And of course, if oil is less than $75 a barrel, they've got to produce more and more oil to pay their bills, which drives down the price of oil, and it becomes a negative feed loop. So this is what's happening. Storage for all this oil is just about gone. So everywhere around the world, we're filling up with oil. We have tankers off Singapore just loaded with oil, and there's no place to put it. And the demand for oil is 10 million barrels less than what we're producing. So we have a classic case of overcapacity. So when you start thinking about the oil cycle, we're getting to the classic end of their cycle with overcapacity. And what happens to all the oil producers? They start running into trouble. Now, 2 weeks ago, we saw the classic case that you could buy oil below cost. So we had a bunch of oil investors jump in, and retail investors actually, they jumped into ETFs saying, my, we can buy oil below cost. What a great deal that is. We're going to buy oil below what they can make it. It's just a great thing. Except if you recall, there's no place to store it, and they actually had to take delivery of it. And what is the price of something when nobody wants it? Nobody wanted that oil, and these oil investors that were doing futures, futures are strictly just a financial structure in order to facilitate the producer to end user. This is kind of a financial transaction. Normally you don't take delivery, and of course they had to take delivery. And again, what's the price of something that nobody wants? And it actually went down to this. We went below zero, went to negative $37 a barrel, and billions and billions and billions of dollars was lost. So in the oil patch, we've had all these huge companies that just paid very, very well. Occidental Petroleum is now in $47 billion in debt. They're laying people off, of course. We've had Whiting. Whiting was actually valued around $15 billion in 2011, and they just went into bankruptcy. And this is really interesting, is that when they went into bankruptcy, the value of the company was about $35 million. And just a tremendous loss. They have all kinds of bonds. And of course, this is called deflation. You're having a deflationary event in Texas when all the bonds are certainly at risk. You're going to have default in them. And we just saw that Halliburton just laid 3,500 people. Now, these were really, really good jobs. These are skilled labor jobs. And of course, they're losing their jobs. And we're talking about the fact, right, that energy research just came out and said that oil workers around the world, about 1 million of them are going to lose their jobs, and a vast majority of them are in the shale industry. So all through Texas, Oklahoma, North Dakota, and of course into Canada, oil workers are going to start losing their jobs. Now, this is the second time that they're losing their jobs in a mass layoff in less than 4 years. So what exactly does that mean for Arizona? What does that mean for us? So this is a lesson for us to learn. Here these folks are in Texas, and we've got the failed state of California to our west, and people are leaving California in droves. Now they have to make a decision. Am I going to go to Arizona or am I going to go to Texas? Those are the two popular destinations. Well, now that Texas is starting to struggle a little bit, now you have to remember that the oil patch gives about 16 or 17 billion dollars in tax revenue to Texas. So that's why their taxes are very, very affordable there, is because the oil industry is giving them a pretty good financial boost. So here you are in Orange County or in San Diego, and you're saying, you know, I think I'm going to change my life and I'm going to move east. Well, directly east, of course, is Arizona. And I think instead of that 100,000 net that we're getting each and every year, I think we're going to pick up some of the people that would normally go to Texas are going to come here to Arizona, because Texas is going to lose some of the shine. And of course, there's going to be a lot of unemployment, and a lot of this unemployment is from very, very skilled workers. So I think as Arizona, we're going to start getting some more people. So will these skilled oil workers stay in Texas? This is their second mass layoff. My thinking is that, you know, after 2 times that you've been laid off, you might start thinking, I may want to start a new life in Arizona. So I'm thinking that we're going to start getting some of these skilled workers that are leaving the oil patch. And of course, these people really, they're hard workers. This is not an easy job out in the oil patch. I think they're going to be coming here to Arizona. And I think if you can work in the oil patch, well, you can build houses, you can frame, you can do roofs, you can do plumbing, you can do lots and lots of things, because these guys are skilled laborers. And of course, when you start thinking of retirees like climate. They like to have some lots of things to do. And of course, Texas had that. But you know, a lot of these retirees want a part-time job. So if Texas is starting to struggle, where they're starting to lose jobs and people are laid off, I'm going to tell you, I think part of that equation to make the decision whether I should go to Texas or go to Arizona to retire, I think Arizona, not only for our climate and all the wonderful things we have to do, but I think that job environment is going to get them to come here. And of course, when you have oil workers and retirees, every time someone comes here, they support 6 others. So it becomes a virtuous cycle. One person comes in, creates 6 other jobs and supports others. That's a negative loop in Texas. And I'm not sure how many years is it going to take for oil to recover. So keep in mind that real estate markets are regional. And if you've been following my work, I've been saying some of the 6 great markets in the United States are doing really, really well. Well, I have to tell you, a couple of those markets were in Texas, and they're no longer doing as well as they were at one time. So I think what we're going to see is that we're going to see a lot of those great investors leaving those great markets. And where are you going to go to get that yield? Again, you're going to come to the #1 market in the United States, and that's going to be Arizona. And of course, the epicenter of that, the journey to the center of the boom, is going to be Maricopa County, and that's where we're going to do really well. We're going to start seeing oil workers, service workers, support workers, all going to be migrating here to Arizona. So I think what we need to do is start preparing for the onslaught. I think you're going to get a lot of U-Hauls going west from Texas coming here. And of course, we've got all those people coming out of California going east and are coming here to Arizona. And I think they're going to impact our marketplace significantly. I think that we're going to do incredibly well. If you remember my cycle work from we talked about last week, we talked about the fact that we should start recovering sometime this year and recovering pretty significantly. As soon as the recovery, I think what you're going to see is once people are able to, they're going to start voting with their feet, and they're going to go to where they think life is better. So what does that mean for us? That means that these homes that are under $325,000 that are incredibly affordable with interest rates where they're at, you can look at a home for $300,000. You're going to be looking at a payment $1,400 to $1,600, $1,700. Certainly can rent that. You know, our investors are going to get a very, very nice cash flow. It's going to beat the Bengen rule. You're going to want at least a 3-bedroom, 2-bath, single-family home with a 2-car garage. I'm going to tell you that land is going to become very, very precious in Maricopa County, and you're going to want to get a backyard. So we want to get a home on a nice-sized lot where the kids can throw a ball, they can ride their bicycles, they can have a swing set in the backyard. And I'm going to tell you right now, rents are going to go up. So what does this mean for you? Let's think of you as being an oil worker. You've had a very, very good job. You've made very, very good money. You made bank. You've had just incredible income coming in. And this is the second time where you've had a mass layoff. So here you are. You have income coming in, but then for no reason of your own, it gets turned down. So please take this as a lesson. Don't allow your future to be in someone else's hands. We want you to take control of your destiny. We want you to build yourself a nice income portfolio for yourself that you control. No one else controls. So when these things slow down, when oil meets its cycle and it cycles down and it completes, it's not fun. And of course, when it's not fun, that means that things are bad. But if you have these income streams coming in, then your life just continues on. And you alone control your destiny. And it's sitting here looking you right in the face. Now, I don't know that you're going to want to start doing something right now because the economy, we have 2 things going on. Of course, we have the completion of a business cycle, and we have this virus that is impacting everybody. But I'm going to tell you, both of these are going to pass. And those that take advantage of things now are the ones that are going to have the advantage when things get better. So I'm going to tell you that very, very shortly, we're going to be entering into a buying season. And I'd like you to start buying these things. Now, I'm going to make myself available to you. You know, we can have a very, very confidential consultation. I'm more than happy to. We have people here that have trained to do this. And we'll sit down and talk about what your circumstances is, because we want you to get off that boom and bust cycle so that you have a consistent income coming in and that your life goes on uninterrupted and you reach financial freedom. Now, we've had several calls come in and several questions come in. Here's the question that keeps coming in. Is this a good time to be buying oil? Well, let's think this through. I think that old adage that buy low and sell high might be one of those things that you might really start thinking that you want to do. Now, you might want to talk to your professional as to what vehicle that you want to lose. And I don't know that buying oil quite now is absolutely the perfect time. But in my mind, if oil is around $50 and you can buy it around 15 or so, those that survive, I don't think that the price is going to stay here. At least looking at the charts, it looks like the price spikes down and comes back up. It cycles like everything else in life. This is the completion of the oil cycle. So talk to your financial professional. Find out what's good for you. Explore that. I think if you can buy low and sell high, that seems to be the magic. That seems to be the magic formula. So always work for us. Which is another lesson, is that I think that you're going to look back 2 or 3 years from now and you're going to say, gosh, Arizona was so cheap. It was so low. I should have bought low so I can sell high in Arizona as well. So I think everywhere in Arizona is going to do really, really well. Just like I think a lot of these oil companies are going to do well. You just have to choose well. I think there's some centers that are going to do exceptionally well. Maricopa County probably is at the epicenter. So we're here in Phoenix. If I can help in any way, I put my office phone number on here. You're welcome to call. We'll set up an appointment for you. And of course, it is very, very confidential. So listen, thank you so very much for listening to me today. If you have any questions, please do. I'm trying to be very, very conscious and considerate of your time. So thank you so very much for listening to me today. Thank you and the best to you. Bye-bye now.